Hello and welcome to the Wealth of Advice market update on the 11th of September 2020. It's been a fortnight since our last update and a lot has happened over the last 2 weeks. Really positive news I read this morning. The figures for the growth in the economy for July have been published. The UK economy grew by 6.6% during the month of July. This was after an expansion of 8.7% in June. That's the third consecutive month that the UK economy has grown, and those growth figures are really positive. Again, you look at some of the news stories and then they put a slant on them saying it's been a good month, but we'll just take the fact it was a good month, and 3 consecutive good months is very positive for the economy. Markets have responded during the months of April, May and June as the stimulus packages and other things around the world were happening. The markets were confident that the coronavirus wasn't going to be the end of the world as we knew it. Now the economy is starting to reopen, and we can see that the percentages of the growth of the economy is coming back. Experts are saying that the growth during the month of August won't be as high as the month of July. Well, let's wait and see what those figures show, but it's definitely going to be positive because you can see yourself different businesses have opened. The Eat Out to Help Out scheme during the month of August also, I believe, they're expecting to confirm. I think there was something like 64 million people took advantage of that. Obviously, the news in the last couple of days, that Boris has announced a restriction on how many people can socialise over the next few months, the rule of 6, anywhere that might have an effect. But overall, the economy is going again and businesses are getting back to where they need to be. Brexit is firmly back on the agenda. We've had lots of stories come through this week about how those negotiations are going and how they're not going. Accusations that Boris is wanting to totally override parts of the withdrawal agreement, which could be worrying if it then upsets other countries around the world if they don't see the UK as being a country who will honour its agreements. So we need to see how that pans out. But what I would say on that, there's going to be negative conflict and news stories coming across. I don't think it's particularly spooked the market so much. The FTSE 100 is going up and down on a daily basis. We did see the sterling depreciate against the euro in the last couple of days on the back of these talks, maybe sort of coming to a head. An article I read this morning says that they are hanging in the balance. But we've got another month to go before Boris's deadline. He said he would like to have things sorted by the end of October. So hopefully positive things happen as the weeks go on. But be prepared for lots of news stories, some of them negative about what might be happening. A news story which came out on Monday or Tuesday of this week was about the Oxford University vaccine trials. A major development it came across in the news, and some news channels presented that as a negative, saying that there'd been a setback and the trial had been paused. In fact, one person had become ill, and like any vaccine trial, they'd simply stopped working on the vaccine while they investigated why this person became ill. This is normal for any vaccine. This is why we need to sort of take a step back and think, well, markets would love a vaccine to come through at the autumn of this year. Donald Trump has said he wants to have one by November. Putin wants one by October. Of course they do. It will help their economies massively if they can get people vaccinated, and markets will come up. Other news from around the world, it was confirmed that the Japanese Prime Minister is going to step down over ongoing health concerns. We've been told in the news this is not going to have a massive change on policy, which is a positive thing, because something that is going to be announced is a Japanese and UK trade deal, we hope. Again, talking about Brexit, the other knock-on effects that will happen as a result of us not being part of the EU is our ability to negotiate trade deals with other countries around the world. So any news that we have that the Japan and UK are coming close to getting a trade deal sorted is definitely going to be positive for our economy, definitely going to be positive for markets going forward. As mentioned when we were talking about Brexit coming back into the news, over the last few weeks, we have explained that a good barometer of how the Brexit talks are going is to look at the currency exchange rate, and the pound this week did fall. Previous week, or the previous 2 weeks, the pound had rose. I think against the dollar it reached a 2-year high, but over the last week we've seen the pound decline virtually on a day-to-day basis. So a weakening pound is good for some parts of your investments, bad for other parts. Not something to be really worried about, but as I say, it's a good barometer as to sort of how maybe the rest of the world perceives the UK is going to be in the future. So a positive Brexit deal, a positive trade deals with other nations should see a stronger pound come back through. Again, following on from previous updates, we've spoke about the American election that's coming up now. It's less than 10 weeks away. What will the outcome mean for stock markets? Jordan, who looks at investments and such like internally for us, he's done a bit of research on that for us this week. And he found a great article and a table which shows that we often hear that the Democrats winning an election would be bad for markets. Donald Trump has praised himself lots of times during his presidency so far to say the economy's doing so well, the Dow Jones was at an all-time high, he was the president who brought it to that all-time high. And he really hangs his hat on the fact that if the markets are doing well, it's a sign that his presidency is going well. It should be noted that over 18 presidencies since Harry Truman in 1948, the Dow Jones has actually performed better on average under the Democrats than Republicans. So when we do hear in the news that if Biden wins, he'll reverse Trump's tax cuts and that'll be bad for the markets, well, history shows otherwise. Over the average term of the Democrats, there's been a 48% increase of the Dow Jones compared to 27% under the Republicans. Obviously, what happens in the past might not reflect what's happening in the future, but I thought it was an interesting thing to share with you as we approach this American election in a few weeks' time. Because anything that happens over there, as we've said, any big negative stories, any big volatility that might happen on their markets will cascade it to markets around the world. Come to that point of the update now where we look at how the risk score 2 and risk score 3 portfolios that we look after are performing when compared to their £100,000 notional investment at the end of February before everything went south, went pear-shaped during that horrible month of March. The last update that we did, the portfolios were up to 99,700. We were almost there, almost at the 100,000 point. And as I've said earlier on the presentation, some volatility has returned. The Brexit discussions, what's going on in the US, the sell-off of the tech stocks, and we have seen markets come down slightly in the last fortnight. So we're now back a little bit lower than where we were, around about 98,500, and the risk score 3 portfolio is roughly £300 lower than what the risk score 2 portfolio is looking. So that's just showing you what you would expect as there's been a sell-off in equities, stocks and shares. The one with the more stocks and shares in has performed a little bit lower. The one with the higher concentration of bonds and government bonds. We got so close to being at 100,000. We hope we can give an update in a fortnight's time where we're back above the 100,000. The things we need to look for to get the markets going up, as I say, more positive talks on what's happening within Brexit. That will have a positive impact on European and UK stocks, and more positive news in the US as to what's going on with how they're controlling the virus, which is something they still haven't really gotten under control. There's still certain parts of their economy which is weak now as a result of that. The next graph looks at how world markets have performed since the beginning of the year. As you can see, the US market has performed the best. Keep repeating this. The world market, the MSCI World Index, is also positive during 2020. The UK market, still very negative. That's the FTSE 100, which is just the top 100 concentration of stocks. We have put the FTSE All-Share in this graph previously for you, but a couple of people have asked me this week specifically about the FTSE 100 when we've had client review meetings. Why is the FTSE 100 so underperforming other markets around the world? Well, if you actually lift the bonnet up and look at what's actually on the FTSE 100, it's dominated by oil companies, by banks. There is one or two big, huge pharmaceutical companies on there, but the main components of what's on the FTSE 100 are companies that people don't want to invest in right now. Airlines aren't doing very well. They're not consuming oil. If people are working from home more, they're not spending money on petrol and things. There's a lot of things going against oil companies right now, so their share price is low. And as I said, if you look at some of the other stocks that are on the FTSE 100, they're just not loved right now. Whereas the American market, the red line at the top, dominated by those technology companies, they're doing very well. There's been a big spike, but again, referring back to something we said a minute or so ago, there was a sell-off in the last couple of weeks of those technology stocks, and you can see how that red line came down from its peak a couple of weeks ago. Overall, though, it's still positive. When clients are coming to see us for their reviews, year to year, they're in a positive position. What's actually invested in the FTSE 100 for everyone's portfolios, whether it's the Royal London stuff we look after, Prudential, the Wealth of Advice model portfolios, the actual exposure to the FTSE 100 is not huge. A well-diversified, balanced portfolio will give you access to the different markets around the world and hopefully overall positive returns, as we have seen over the last 12 months. This graph here is showing how the Wealth of Advice risk score portfolios have compared to those other markets I've just had on the previous graph. And what you can clearly see is by putting together a blend of funds, create a multi-asset approach, using good fund managers who can pick stocks and pick the right stocks, will deliver positive returns in the long run. Each of these model portfolios have much lower risk than being invested directly in to the market or just tracking an index, which some other advisor firms might do. And all of our clients year to date who've been in these portfolios will have achieved positive returns. Whereas if you were just tracking the FTSE 100 and nothing else, as the previous graph showed, you're 18% down, which is not where you want to be. Those clients watching who have investments and pensions held with Royal London, we've deliberately not mentioned those portfolios on this update. We do have a conference call, a direct discussion with Trevor Greetham, the main fund manager at Royal London, next Thursday. So we'll wait until our next update before providing a bit more of an update on how Royal London are doing and what our thoughts are on that. Hopefully next Thursday's discussion with Trevor is a positive one, but no matter what it is, we'll deliver that back to you on our next update. So thanks again for listening. We are keeping our eyes closely fixed on what's going on in world news and everything else. If any clients have any need to get in touch with us, please pick up the phone and give us a call.